Hi there, welcome to Wyckoff Technical Analysis session for Bitcoin. So on November 4th, I shared that Bitcoin was really close to the edge of the uptrend channel, the bottom of it. So I issued an alert about a week and a half ago. And a few days back on the 11th, I also shared Bitcoin trend may change in 2 weeks' time. And in just 2 days ago, this has already happened. Bitcoin officially dropped outside of the upward channel. Hey, hello, let's get it done. So, the key question is, where is Bitcoin heading? Is it finally really starting the bear market? So, to start with, if you're new to my sessions, these are the 3 key takeaways that you can expect from my sessions. So let's get started with the weekly chart of Bitcoin. We see this very long candlestick, dropping or cutting all the way through this green line. This green box, if I zoom out, is actually the uptrend that started back in 2023. You can call this a bull run for Bitcoin, that we are already in it for over 2 years. And this is the very first time the price of Bitcoin has dropped outside of the channel. If we try to look at it in a way that I previously shared. Every time when the price moves, it tends to bounce off between the boundaries of these channels. And this time, if we look at the buying climax back in April 2024, and then the second peak, the upthrust, you can call that in Wyckoff terminology, in December 2024. Both times touched on the ceiling of the box. And this time, however, when we got to the all-time high in mid-September, or even during July, when it reached a level higher than the previous peaks, both times missed the mark. So it's quite a bit of distance from the ceiling of the trend. What that means is a declining momentum. So if it is a line curve, so if I switch it to the line chart, you see initially it should be going this way, and then the peak eventually flattens out. So that's what's going on in my view, that the momentum that's driving the buy-in for Bitcoin has slowed down. That doesn't mean that this is the end of it. Even though it has dropped outside of the upward channel, and that I've shared the chance of getting towards the sign of weakness is higher. The fact is, a lot of times, if we want to see some price drop further, it will surprise us that it doesn't drop as quickly as we think. All right. So if we look back to what happened back in 2021 into 2022, there was a leg downwards just to get to another high. All right. So there was a pretty long period at that point that lasted for 84 days. All right. That's 12 weeks in total. And then it dropped for another, staying low for another 9 to 10 weeks before it got to another peak. This time it's way different. We've got peaks after peaks, just that we are not sure whether this is the final yet. Okay, it can drop to a point to the sign of weakness. May it be the 91K level, where the automatic reaction related to this peak or climax over here. So that can be the first sign of weakness, and it can drop even lower to the same or similar level as in March this year. So we're not talking about like 2-3 years ago, just this year. About half a year ago, we were at this point when the price first tested the bottom of the upward channel. But that time it rebounded pretty strongly and got to where the all-time high was. This time is a bit different. So when it comes down to test the key levels, may it be the 91K, the blue level, or the light blue level at 74K, like what happened back half a year ago. This is the time when potential consolidation may happen. So if it repeats what happened back in springtime, that after consolidation it tried to retest the levels again, when that happens, we have to observe very closely what the volume looks like. If we look at what happened just here after March-April time, the volume was actually not as high as in late 2024 when the first peaks were created. Look at all these volume bars. They were way higher than the leg up this time to the all-time high. So it's a sign that, another sign that the momentum is declining, and it's probably fewer people are FOMOing in for the limited supply, pushing the price to even higher. And now you can say it's correcting, or getting to the early stage or early signs of potential accumulation. So just to share one more thing, don't expect Bitcoin would fall all the way back to the red key level. Okay, that can happen, but it's not a must. Look at this white box here. That's the long-term playground zone that I have been tracking, for all the coins. For Bitcoin itself, it's an ascending trend because of the special nature of Bitcoin. For altcoins, they are pretty much a flat zone. But Bitcoin, because some people treat it as digital gold, and it has certain inflation factor got into it. So that's why it's an ascending trend. But 70-80% of the time, Bitcoin was trading within this zone. And now there is a chance for it to return to touch this zone. That's what happened back in March-April time as well. So this is where it can get to around 70K. But 30K, some people would say that's crazy. That's not going to happen with all the institutions potentially coming in, all the ETFs, a lot of reasons that people have been saying. But there is a possibility, okay? The reason I'm sharing this is that if Bitcoin dropped to a level probably around the green key level of 62K, it can be a little bit higher or lower. It can start accumulating at a higher level compared to what happened back in 2023. So if you are trying to understand the Wyckoff method, there's a question that the community member asked me just last week, I think, that why sometimes he see my text, let's say the selling climax, one is at, for this example, lower than the red key level, but another selling climax was at around maybe the orange or the yellow key level. So that's the tricky part of it. When we look at what's happening, a lot of people are referring to the textbook chart that the where it started, it's where it's going to end. That's not the case. If you look at enough chart, sometimes it just starts to accumulate higher and then build up to another distribution. So for Bitcoin case, that may be or likely be that would likely be the case. Even though there's a chance for it to get lower, it doesn't mean it's a high chance. So this, as of this moment, I will adjust this just to give you an example. There are two scenarios here. One blue scenario, the yellow, and the other is yellow. In yellow, basically, the upper soft distribution hasn't appeared yet. Reason being, I treat this part during March 2024 to October 2024. that particular half a year to 7 months, was a PSY preliminary supply period, that horizontal period. And in the blue scenario, I consider what happened in March 2024 was a buying climax. So that's why in the yellow scenario, it's one stage later, basically. For the blue, the upthrust of the distribution already happened when Bitcoin set the all-time high in October. Okay, so that's the difference. But anyway, whether it's the upthrust or upthrust of the distribution in October, it's coming down for a sign of weakness in both scenarios. That doesn't change anything. Okay, so I know there's a lot going on in this picture, even just the weekly view. I've covered a lot about the key levels that Bitcoin may reach. The first stop to be tested will be 91K. That's a high level sign of weakness relevant to the climax set in December last year. And then the second level of test would be around 74-75K. That's the sign of weakness level set around March and April this year. All right, those are the two key levels for Bitcoin to show whether people are really moving their capital elsewhere. We see day after day the market cap of crypto has been declining from the peak of around 4 trillion, now back to mid 3 trillion or even lower in some days. So that's a tide changing. Okay, let's get to the daily chart and see what's happening in lower level detail. So that's what happened 2 days ago when the price first dropped through the green line. We talked about this red box, the downtrend that started back in October. After the all-time high was set. We have been in this downtrend for over a month. And as of now, the price of Bitcoin is still trading within this downtrend just to test various intermediate levels within the range set by the purple key level of 104K and the blue level of 91K. We see intermittent bounces. If you look to the left, you can understand why. There were quite frequent trading activities around these areas. Okay, but you can see that they are not providing very strong support. Look at what happened yesterday. It dropped from this yellow dash line all the way to below the red dash line. Okay, so in the intraday, if you look at, if I drop to the 3-hour chart, you see they stopped in between these levels. But if you look at it from a higher level perspective, from the daily chart, if you're trading at a longer time frame, that doesn't matter to you. These lines won't provide sufficient support. Okay, you see in the daily chart, it seems like these lines doesn't mean anything. But if you get to lower time frame, more frequent time frame, you see where the candlesticks are pausing, finding support or finding resistance. Okay, so you have to switch along different time frames when you do your charting or do your trading. You can't just focus on one and miss out the picture in the other time frames. So this sign of weakness has been confirmed. Before I remove the question mark and the percentage, I'm showing you where this is. So this was where the June sign of weaknesses were in the daily chart. So this is different from the weekly. Okay, in the daily, things happen very, very quickly, and the stages are basically showing up more frequently. So it's time to, I just want to copy this so I can reuse it at a lower level. But this sign of weakness basically has happened last weekend. There was obviously an LPSY. So if this continue to go down, if we look at the weekly chart, somewhere between the blue and the purple, if it bounces off, if if it sets a sign of weakness here and bounces to set an LPSY in the weekly. Okay, let's assume this is going to be the scenario. In the daily chart, there can be many candlesticks when that happens. So let me draw this a little bit cleaner. It will look like it's consolidating or accumulating, and then set another buying climax in the daily chart, and then eventually it may go down again just to drop to another selling climax. Alright, so now it turns to the question. Is the thing we are seeing here, this long candle and this white candle we're having right now, would this be the selling climax of this mini run in the daily chart? And this potentially going back to challenge the green line, okay, bouncing back to the bottom edge of the uptrend, that 2-year uptrend. Let's assume that's the case. Maybe is developing an automatic rally, assuming this is really the daily chart accumulation cycle. Okay, that's potentially what's going on. Another possibility, let's say, what's currently going on is just the preliminary support, meaning the selling climax hasn't shown up yet. Okay, so during the preliminary support, there can be horizontal trading, and then eventually it drops to a level where it really stabilizes and then start to accumulate and goes back to challenge higher levels. So what's the difference between this one and the version that I mentioned just a minute ago? Basically, this guy hasn't happened yet for scenario 2. Scenario 1 has assumed this is the selling climax. Okay, we don't know until this further evolves, the chart further evolves. But when we look at the volume, the one we had yesterday was very high. Today is taking a pause, but that doesn't mean the next few days it can go higher. And we are in the weekend. Usually in weekend, during weekend, the trade tends to have lower volume unless some big countries come out to announce something in the weekend. That's not common, okay? But it can happen. So when we look at this, I'm just trying to pull an example and show you. So there was probably some kind of news that came out on during March 2nd or 3rd, but it should be something like this. So it dropped for a few days, but then it's got some horizontal trading before it dropped to the actual selling climax. So I'm trying to pull together a few examples so you can visualize. Sometimes it happened very clean, no horizontal trading zone, drop straight to the selling climax. But sometimes it would just take a couple of candlesticks sideways trading before the actual climax, selling climax show up. So this is what we are going through right now. Okay, this may be just the sideways trading part that we're going through, and this guy may not have appeared. Okay, so I've explained 2 scenarios, and these intermediate support and resistance lines. Remember the time frame, always switch up, switch down to see what's going on. Don't just fixate on one time frame. On the log BTC chart, BTC bounced from the diagonal uptrend line dating back to 2023. So which is correct, log or linear? So some people like to look at the log chart. I prefer to look at the linear, just because I am focusing on Wyckoff analysis. So think about 100 years ago. Where do the people get the log charts, right? They can do a lot of calculations and get that, but it's just not like with all the sophisticated tools we have today. All right, that's the reason why I'm keeping or staying on the linear chart. And okay, also the air hockey method that I'm using, meaning these channels, these channel boxes. Again, I'm not the one that invented this. I also read from another German analyst that's also, very, very old. Not that he's still living. In those days also, there's no log chart. So when I draw these channel boxes or air hockey tables for looking where the prices are going to bounce, that's why I'm staying on linear chart as well. So there's no right or wrong. You're welcome. It just depends on the methodology you're using and where their foundation is from. So if certain indicator or the formulas or algorithm they're built on, they're riding on log charts, use log chart. If your methodology or your calculations, depending on your algorithm, the programs that you're using, is based on linear, then use linear chart to look at your charts. So there's no right or wrong. Hi Mona. So I have shared how I choose the different coins or projects that I cover in the community post, and Tau is actually one of it that I'm going to cover tomorrow. So it's going to be there. Okay, back to here. So when it further comes down, if this continues with the downtrend, let's see if it travels sideways instead of going deeper to test the light blue key level of 74K. Let's assume it finds support around the 91K. This is the triangle that I usually cover if you have been with me in my other sessions. This is pointing towards December 20 or 20th or 21st. That's a potential timing for Bitcoin to break outside of this downward channel. All right, assuming it stays above this blue key level of 91K. Could you recommend me a book about this? Are you asking about Wyckoff or something else, Albert? Wyckoff, I know they have actually got there's a website that offers training courses. Not that I'm tied to them. It's during the process I was looking through Wyckoff stuff that I discovered that particular institute. You can take a look at that. There are some free resources for you to take a look at what Wyckoff method really is, and you can start off from there before digging deeper into whether to actually take the course or buy a book. If that's something that you find useful to you or you're really interested in, then go ahead. I believe there are a lot of people issuing that. Not that I have gone through Wyckoff books in particular. I basically look at that institute's information and some other articles I found, and then I build up on that with other books I read in the past. Okay, so we covered the first time point, and then if it really drops further to the 74K, that's the light blue key level. I might have shifted a bit just to check whether it still have all those peaks encapsulated. So there are two lines over here. White line is the ceiling of the long-term playground zone. It's very close to the light blue key level of 74K when time goes on, because I mentioned in the weekly chart that's an ascending trend. So when we get closer to end of January, if Bitcoin is really continuing its downward trend, that's another occasion that the breakout can happen. So these two breakout points, remember, let me bring us back to this chart, the weekly chart. These 2 points I mentioned, the 2 potential signs of weaknesses that correspond to what happened back in December 2024 as well as March this year. Okay, that's where some stronger bounces may happen. Okay, so that's where the breakout could happen, the bounces. Okay, they are pretty much, you can translate them in such a way. Okay, it's not easy to look at a chart for things that hasn't happened yet. I'm just trying to show you what can potentially happen if the downtrend continues. So hey Sergio, how to identify bottom? Let's get it done. 2017, 2021, after BTC Tiger top, we had altcoin season. Do you think we can have anything from altcoins? Bitcoin dominant is still under 60%. Okay, so 2 questions. How to identify the bottom? So that's a good question because that's actually something I will answer compared to people asking me where is the bottom going to be. Because how to identify is how we read the chart. Where the bottom would be is something that we don't know, because any news that come out can drive things ending sooner or going even deeper. So there's no point in guessing the bottom, but reading the bottom is something we can do. So a lot of times when you look at it, you can go back to what happened in the past, maybe Bitcoin or other altcoins. You notice when the price drops to a certain level, it will eventually flatten out. Maybe in the intermediate range or at the lowest bottom. So if you go through a point where you see very crazy selling, those red tall volume bars, and then eventually it dies down, that's where the things are going to flatten out, and that potentially is where the bottom is. Okay? To tell the difference between whether this is the bottom or this is the bottom, that's the really, really tricky point. So in Wyckoff, you have these stages as references, so you can have a better gauge of whether this is the actual bottom, because this is not where the this is just the same level as the sign of weaknesses set over there, and then you can expect there may be lower point that's going to happen, okay, when the price comes down. And these volumes are not very crazy, right, compared to these tall red bars. So there's a potential this is not the actual bottom happening. Compared to here, those tall red bars are indicators that you're potentially going through or have gone through a stage where that leads to a bottom. Fast forward to where we are today. We haven't seen these very tall red bars yet. So has this bottomed out? I don't think it has. So I'll wait for those very tall red bars to show up before deciding whether there's a chance that Bitcoin has finally bottomed out. All right. Dustin, if I pronounce it correctly, or DUSD on so, that's your name. Okay. Sergio's question. Altcoin season is something that while we're talking, let's have a larger me in the screen. That's something I don't believe in. So it's again a broad statement. And when I share the charts of altcoins, you can see actually the altcoins are not going in sync. Some altcoins are going through distribution. Some altcoins has been in accumulation since the beginning of the year. So, when we say altcoin season, it sounds to people like, oh, every altcoin is going to pump. That's not entirely true. So I'm always skeptical about these kind of broad statements, just like what I shared in one of the sessions, I think last week or a week ago, when a member asked me, hey, what do you think about people saying this month is the best month in terms of performance of altcoins? I said, go to the monthly chart and take a look. You can count by the candle, for November, for how many years it's going up and how many years is actually not. Then you know, when you see these kind of news, that's totally not true. I've made a video about sell in May as well, if you're interested. I basically have done some statistics for the Magnificent Seven and Bitcoin. You can take a look at that as well. You can easily find evidence that these kind of broad statements are easy to sell, easy to put it as titles or headlines. But if you go to look at the charts yourself, you don't need to be very sophisticated or detailed. Just go to the monthly view while we are here. Candle by candle, you can immediately see which month you're looking at, right? And they are just basically not the same color year over year. Okay, so that's the altcoin season answer in short. We are at a stage, after all the regulatory changes, especially in the US, and in other parts of the world as well, the regulatory framework has improved a lot. If you go look at BIS or the other organization under the United Nations is the I'm trying to think about the name of it. I will share in the community post. That organization basically will do a panel review every year across the all the countries that are the members. They advise all the crypto trading rules and all the regulations or like virtual assets, how countries should establish frameworks around those. Those has improved over the years, and with all these changes, I believe in Asia or in Middle East, the UAE, and the other countries around the world, Europe, Americas, they are more supportive of crypto projects. So the world is treating altcoins or projects other than Bitcoin differently. So it's more about doing actual business now, in addition to speculative part of coins. In the past, we were still in the struggle between whether it is securities or not, or that kind of things, right? So that's why they are across the board being treated equally. Okay, when things go wrong or some bad news comes out, everybody drops. When the news or the sentiments are less pessimistic, everything goes up. Now it's different. People know, okay, some of the things that's been dragging all these altcoins has been gone, and now they're looking at the projects individually. Are these projects partnering with some big names or established companies or brands or chains? Do they have long-term potential? Are they setting the standards for the future of maybe trade infrastructure or payments infrastructure or other aspects for our daily lives or financial transactions? Those are going to be factored in, and those projects will take the advantage or take the spotlight, and they may survive better in bear market. Again, bear market is a broad term, but to make it easier for people to understand. So DUSD, could we agree there's now narrative seasons, and the narrative seasons are amplified by Bitcoin's performance? Another very good question. Narrative season, I would say that's always the case, whether it's for crypto or not. In traditional stock market, that's the same. Whether they use financial terms to wrap it, let's say, it's economic downturn, or like it's financial tightening, or quantitative tightening or quantitative easing, there's always a narrative around it. Okay, and that's going to push certain assets prices up or stock prices up, like maybe by industry, or even within an industry, what kind of segment are you in? Let's say gold. Are you the just the trading or custody part, or doing the business part of it? Are you the user of gold, or are you the one that mine gold? Same for crypto. Many narratives can come out. We all know people are very creative when they throw out stories and see how, well, actually they know how people would react before they put out a story. Sergio, good question. ETFs, that's another interesting thing that I think I responded to a couple of comments before. So it's not always the case. The way I see it, while ETF can provide certain level of positivity of people's perception towards that particular project, and also providing the channel for easier access to invest in the project, which may lead to, because the ETFs are built on, you have to look at the ETF design itself, but usually if people buy or put money into the ETF, that essentially mean whoever managing the ETF has to buy the actual underlying asset, so that can drive the price up. But there's a ETF is a channel to acquire certain things, but that doesn't mean we can't sell. Okay, that ties to the wave of institution narrative, going into the crypto market. They are not the same as us retail investors. We can choose to be diamond hands, and we can choose to panic and panic sell. So institutions, they don't act the same way as we do. They do a lot of calculations. They have masters or even doctors that set up models to help them calculate what kind of risk appetite is the company having. Are they going to risk maybe 1% or 5% of their liquid asset sitting in the bank just to put into the projects? Maybe they are supporting or working together with the project. That's why they're acquiring a certain amount of coins. So in future, when they're actually using it, they have the reserve over there, and they that's basically like a hedge towards inflation of that particular coin. That's one way that it can happen. But if that's the case, they're basically doing hedging. If they really need the coin, they will go through an exchange, buy it, and put it in the custody. So there are, I would say, two simple reasons for institutions to get certain things, coins. One is, like I said, they actually need to use it in future. Then it will become a cost to them, but they're willing to bear that cost because they know they're going to use it long term, and that's something going to be inflationary. So the price is going to go up, And that's why they are keeping a reserve right now. So from a user or partnership kind of view, that's number one. Number two is, like I said, purely hedging or investing. That's where they go through ETFs and not buying the actual asset because they're not going to use it. They see the potential of it, but they are not acquiring that actual coin into their reserve. They invest in it, so if they're going to use it in future and the price went up, they're going to sell their ETFs and use that money to fund what they're going to use. So in that way, they're going to lose off because of the price rise. So that's how I see, how institutions are going to do it. They're not going to gamble in this game. They have actual business running and they have their own risk control. It's not like retail investor. I have, let's say, every month, if I have 10,000 I can invest, I'm going to put 10% of it to riskier assets, and then the other 90% is spread it across stocks, bonds, or precious metals. Okay, retail investors, maybe we're doing it in a very simple way. Not saying that you can be very sophisticated. You might have learned a lot and set your portfolio differently. But institutions basically will have an entire finance department to look after what they are investing in. And if it's not a private firm, even a private firm has shareholders. But even especially if they're not private firms, if they are shareholding companies, they have to report it to any whatever regulators they have registered under, and they have also to report to their shareholders. Think about the big tech companies that has voted. The shareholders has voted whether they want the company to invest in Bitcoin. Okay? There were examples. I don't need to name those companies. You know them. The news were there. They have voted. And how many of them, their shareholders actually agreed to invest a portion of the company's money into Bitcoin or other crypto? Okay, that can give you a sense of the hype being driven that institutions are going to flood in. I don't think it's as easy as it sounds. Okay, there are already, like I said, many examples, and if people's sentiments are really going to change, we'll see more positive examples. Maybe really companies are investing, and before that they should run AGM or EGM. I don't think that's an EGM thing. That's an AGM thing usually. And ask their shareholders to vote, and you can see some companies may come up with positive results, and that's where the tide is changing. Not until then, if people are still voting for not going to invest in it, I don't think the big influx of institutions is going to happen. There are actually, I think on CoinGecko, you can check Bitcoin's holding by institutions, and there are only about a little bit more than 100 as of this moment. If they are flooding in, why there's only 100? That includes government as well. The Bitcoin they have seized, or from whatever way they have got it. So keep an eye on those information. If it's really going up, that's where the trend, or when the trend is going to change. Okay. Yeah, so thanks for all the questions. I reserved the Saturday sessions to less sessions so I can have these kind of chats with you. Hope you're enjoying this, and I'm moving on to the next session for ICP, and then we'll have Doge and VeChain as well. Thanks for joining me. See you in the next session.